Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video. Hi everyone, this is the third video of Internal Reconstruction chapter, and in the previous videos we have seen the introduction and the concept of internal reconstruction, and we also saw the accounting treatment of internal reconstruction. Now if you haven't watched that videos, then please watch those videos first, okay? So I will put the links in the description. Now here in this video we are going to solve this problem, a basic problem, okay, a simple basic problem to start off this chapter, internal reconstruction. And this problem may come for your exams, okay? This type of problems may come for your exams for 5 marks or 6 marks depending upon your universities. Alright, so here's the question. Prakash Limited received the sanction of the court for reducing its share capital for internal reconstruction. So from this sentence you can come to know that the court gave them permission to do internal reconstruction, and here they have said reducing its share capital, right? That's one of the method of internal reconstruction, yeah, reduction of share capital, and the court has given permission to reduce their share capital. Now let's see the first question here. Cancellation of 25,000 old preference shares. Cancellation of 25,000 old preference shares of rupees 20 each. So here they have said old preference shares have been cancelled. How much? 25,000 number of shares of 20 each. Of 20 each. 20 was the face value. They were fully paid, okay, by the issue of same number of new preference shares. So new preference shares were issued, same number of shares, 25,000 shares only, of 15 each. So here you can come to know that here only one thing is happening, okay? The face value is getting reduced. From 20 it is getting reduced to 15, okay? Face value is getting reduced. What was the face value entry? We will see that later, okay? Then we have here cancellation of 25,000 old equity shares of rupees 15 each. So here it was preference shares, here just it is equity shares, okay? Here it's also the same thing is happening. See, cancellation of 25,000 old equity shares of rupees 15 each. So old equity shares have been cancelled, fully paid by the issue of equal number of equity shares of rupees 10 each. Here also face value is reducing. From 15 it is becoming 10, okay? Old cancelled, new shares were issued, 10 each, fully paid. So here they are reducing the share capital. That's the method of internal reconstruction, reducing the share capital. Alright, we will see these two entries later. See now, next here we have to write off debit balance of profit and loss account. Now what is debit balance of profit and loss account? What it signifies? It signifies loss, right? Profit and loss account debit balance signifies loss, and it is shown on the asset side of the balance sheet, right? So to write off or reduce it, what you have to do? You have to credit that, right? It is an asset, it's a kind of an asset. So to reduce an asset you have to credit it. So we will simply credit that debit balance of profit and loss account to reduce 1,05,000, okay? Then here we have to reduce the value of machinery by 45,000 and that of goodwill by rupees 20,000. Okay, now machinery is also an asset and goodwill is also an asset. So to reduce them you have to credit it, okay? If you want to reduce an asset you have to credit the asset, okay? So we will credit both of them. And then we have here to reduce the value of investment to market value by writing off 40,000. So here again they are saying to reduce the value of investment to reduce the asset. Investment is an asset. To reduce the asset we have to credit it, okay? Simple. Alright, these are very simple entries. We will see them now. See, one more thing I need to tell you. See, profit and loss account debit balance, trademarks, copyright, okay, and then goodwill, reserves, all these items have to be written off, okay, whether the question says or not. Now here they have specifically said, but I'm telling you that in other big questions you will get, in big problems you will get a balance sheet, and in balance sheet they might give you profit and loss account, goodwill and all, and they will be silent about it. They won't say a single thing about it. Then you have to write it off, because these are the losses. What we do in internal reconstruction, we write off all the losses, right? We eliminate all the fictitious assets, we eliminate all the accumulated losses, and we revalue the assets and we reassess the liabilities and reduce the share capital. That's what we do in internal reconstruction, right? So accumulated losses and fictitious assets like patents, goodwill, all these have to be written off, okay? Alright, now we will see the journal entries and we will see the solution of this problem. Alright, okay. Now let's pass the journal entries, alright, and solve this problem. See, the first thing was cancellation of 25,000 old preference shares of rupees 20 each. So here they told cancellation of 25,000 old preference shares, right? So let me tell you this, whenever they say change in face value, okay, reduction in face value from 20 to 15, that's what's happening over here, right? From 20 they reduce the share value to 15. Now they said to pass the journal entry for that. See, whenever they say reduction in face value, here they have specifically said cancellation, but let me tell you that in the exam they will not give cancellation, they will just say reduction in face value, okay, face value has been reduced. So whenever you come to know the face value has been reduced, you have to scrap off the old shares, you have to cancel the old shares, okay. Now how to do that, how to cancel the old shares? See, now where do you show equity share capital or preference share capital? You show it on liability side, right, of the balance sheet. So to reduce the liabilities, what we do? To reduce the liabilities, we debit them, right? So that's what we are going to do. Preference share capital, we are going to debit it, all right? Preference share capital. Now, preference share capital debit, okay? Preference share capital debit, so that it can be reduced, okay? So to reduce that preference share capital, to cancel it out, to scrap it off, I have debited it, okay? So here they have said 25,000 and 20, right? 25,000 into 20, how much it is? 25,000 into 20, it is 5 lakh, all right? So 5 lakh. Then you have, now you have scrapped it off, okay? You have scrapped the liability, this preference share capital liability. Now you have to create a new liability, you have to create new shares. See, you have to create this issue of same number of new preference shares of rupees 15 each, fully paid, yeah, from 20 to 15. So how will you do that? To increase the liability, you will credit it, okay? So so preference share capital, preference share capital, okay, preference share capital, you will credit it. Now by how much you will credit? See, number of shares is same, 25,000 at 15 each. So the face value is 15, so you will credit 25,000 into 15. 25,000 into 15 is equal to 3,75,000. all right, 3,75,000. Now how much the company gained by reducing the share capital? How much it reduced? That is a gain for a company, so that gain will go to this account, capital reduction account. This temporary account is opened to do internal reconstruction, okay? So it will go to capital reduction account. 5 lakh minus 3,75,000 is equal to 1,25,000. It will go to capital reduction account, okay? All the gains will go to capital reduction account, all right? And then here we have the next entry. Now the narration you can write it on your own, okay? It's not important, like the face value has been changed, whatever, you can write it by seeing the question only, you can write, all right? Then here next you have cancellation of 25,000 old equity shares of rupees 15 each. Here also the same thing, here's also the face value is changing, so whenever the face value changes, you have to scrap off the old shares, okay? Now to remove that liability, to scrap off that liability, what we will do? Equity share capital debit, yeah, equity share capital debit, how much? 25,000 into 15, that is equal to 3,75,000, okay? We will debit that to reduce the liability, okay? I will write it over here, 25,000 into 15, right? 25,000 into 15, okay? 25,000 into 15. And then they said they issued new shares by the issue of new shares of equity shares of 10 rupees each, okay? So the face value has been reduced, so those new shares will be created over here to equity share capital, to equity share capital, all right? How much? It will be equal to 2,50,000, 25,000 into 10, okay? The new face value, 10 is the new face value, right? So now how much is the gain? That gain will go to capital reduction account, right? Whatever gain the company receives, that gain will go to capital reduction account. See, 3,75,000 minus 2,50,000 is equal to 1,25,000. Simple. You reduce the share capital here and here, Okay, so by reduction of share capital the company is gaining, and that gain will go to capital reduction account, and here also capital reduction account. Then the next is to write off debit balance of profit and loss account of 1,05,000. Okay, so how to write off the debit balance of profit and loss account? Now they have said to write off the, see, now I told you profit and loss account debit balance is shown on the asset side of the balance sheet, right? So to reduce the asset, what we will do, we will simply credit it, okay, to profit and loss account. This is an asset, so we will credit it. All right, we will credit it to profit and loss account. How much? They said it right, 1,05,000. In the question it was given 1,05,000, so you will credit that. And then next you have, they also said to reduce the machinery and goodwill by 45,000 and 20,000, so you will reduce that to machinery. Machinery is also an asset. They said reduce the machinery to, so credit the asset. Okay, how much? 45,000. Yeah, 45,000 machinery, reduce machinery by 45,000. And then they said reduce goodwill also, so you will also do that. Okay, goodwill, how much? Goodwill by 20,000, so you will reduce it by 20,000. And then you have got investment. They also said to reduce the value of investment, to market value by writing off 40,000. So investment are also an asset. To reduce the investment, you have to credit it to investments. Okay, I always forget to write account, investment account, so that is 40,000. Okay, 40,000. Now see, we have reduced all the assets. Now to reduce the asset, what we did, we simply credited them. Okay, there is no big deal over here. Then here we will write, what we will write over here. See, here all the gains were credited to capital reduction account, right? Credit. Now that capital reduction account will be used over here to write off all these losses. Okay, so capital reduction account will be debited over here. Capital reduction account. Now what amount you will write? You will add all this and you will write it over here. Okay, see, I will show you. See, 1,05,000 plus 45,000 plus 20,000 plus 40,000, that is equal to 2,10,000. Yeah, so here you will write 2,10,000. Okay, simple, right? This entry looks big, but it's very simple. All assets are reducing, so we credited them, and then we debited capital reduction account because we are using this temporary account to write off all these losses. Okay, here credit, here you have to debit it. Now see one thing, I told you in the previous video that whenever there is a balance left in the capital reduction account, you have to transfer that balance to capital reserve. I told you that, right? You need to transfer the balance to capital reserve account. Now first we have to check whether the balance is left or not. See how to check. See, here capital reduction account was credited, here also credited, right? So what was the credit here? Now credit is 125 plus 125, 125 plus 125, how much it is? 2,50,000, right? 2,50,000. Now here they were credited 2,50,000. Now here it is debited by how much? 2,50,000 minus 2,50,000 minus 2,10,000. So 40,000 balance is there. 40,000 balance is there. So that 40,000 balance would be transferred. That 40,000 balance would be transferred to capital reserve account. Okay, capital reduction account. Capital reduction account. This is a temporary account, right? So you have to close this account and transfer the balance. Whatever balance there is, you have to transfer that to capital reserve. All right, capital reserve account. See, now it is completely balanced. Here I will debit 40,000 and here I will credit 40,000. See, 1,25,000, 1,25,000, that is equal to 2,50,000. Okay, so credited capital reduction account 2,50,000, and here debited capital reduction account 2,10,000 and 40, that is equal to 250. Okay, so the balance is there. All right, it is balanced and the capital reduction account is closed, and the balance is transferred to capital reserve account. Okay, This is how you pass the journal entries for internal reconstruction. All right, easy, right? Simple. The thing we did here, the liability was getting reduced, so we debited it, right? And then we created the liability, and whatever gain we did receive, that gain went to capital reduction account. Okay, same here, and here we reduce the assets by crediting them, and whatever losses we had to incur, those losses were debited to capital reduction account. Okay, and capital reduction account balance was transferred to capital reserve account. All right, simple, right? Okay,